Hi, this is Bill Neville with the Entrust Group, and I'm going to be showing you how to submit a fair market valuation for your self-directed IRA with Entrust. So this is the agenda. First, we're going to do an overview, go over fair market valuation best practices, what Entrust's role in the process will be, how to submit your Entrust fair market value, both manually and through the portal, and then finally, we'll go over some frequently asked questions. So here we go. The fair market valuation is used to update the valuation of your asset. Since we are holding non-traditional investments, it is incumbent upon you as the account holder to update us with the fair market value. It is something that all retirement account custodians are required to provide to the IRS on an annual basis. When do we require an updated fair market valuation? When you are taking an in-kind distribution, if you're going to have the asset distributed to you. If you want to update us that the asset that you hold no longer has any value. If you are converting your account from a pre-tax account to a post-tax account, if you're moving it from a traditional IRA, for example, to a Roth IRA, or if you're moving just an asset, if you're moving the entire account, or if you're just moving an asset, one of the assets from your pre-tax account to a post-tax account. Note that any stocks, bonds, or precious metals do not require the submission of a fair market valuation because those investment values are determined by a market. So the exchange traded stocks are updated through the market as well as precious metals. So what are some best practices? The form has to be completed, signed, and dated by you, the account holder. If you are using a third party to provide the evaluation of an asset, then that third party evaluator must also sign and date the form. There's a section on the form for them to sign. That form must be sent to Entrust along with any supporting documentation you have for the valuation. And a fair market valuation form must be completed for each asset that is held in your account. Note that the form can either be signed by a third-party evaluator, or you need to provide supporting documentation if you don't have a third-party evaluator. If you are using an independent third party for the fair market valuation, that individual would complete their section of the fair market valuation form. So who would qualify as an independent third party? Could be a certified appraiser. It could be someone who represents the investment sponsor. So a managing partner or someone of that level who is working for the investment sponsor for the investment that you hold. If you're holding real estate, a licensed real estate professional, such as a broker or real estate agent. And then any knowledgeable third parties, such as a CPA, attorney, financial planner, who is at arm's length from both you and the investment, can also be the third party value. So what supporting documentation will we need for real estate? A property tax bill is acceptable, but only if it's not used to calculate or take an in-kind distribution. So if you're going to have a property distributed to you, a property tax bill is not acceptable. We would need an appraisal. Or if you're updating the fair market value, we could also accept a comparative market analysis completed by a realtor or real estate agent, as long as they are at arm's length from both of you, the account holder, and the investment. So, for example, if your realtor is your spouse, they would not be allowed to be the third-party evaluator on the property that's held inside you. Appraisal is always acceptable, but it's not always required. It is required if you are planning on taking the property as an in-kind distribution, or if you are converting property from pre-tax account to a post-tax account. Other supporting documents, an opinion letter on a company letterhead from a qualified independent third party is also acceptable. If you are providing an opinion letter, the third party must sign and date the opinion letter itself and the fair market valuation form. So that would be someone like a CPA, attorney, somebody like that. For LLCs and other entities, if you are holding checkbook control LLC inside your IRA, then you would need to provide a valuation for each of the assets that's held inside the LLC. So for example, real estate assets owned inside an LLC or entity must be evaluated by a third party. Then other assets owned by the LLC, such as bank or brokerage accounts, you could have a year-end statement proving their value. And then the valuation of all these assets added up would equate to the total value of the LLC that's held inside your IRA, would be determined by each underlying asset. If you're holding private equity, such as a private fund or a private company, the valuation may be provided by the investment sponsor themselves, the company or the fund sponsor, via an official letter from the investment company on their letterhead and signed by someone with knowledge of the asset's value, someone with the company. An updated asset value may also be acceptable when sufficient supporting documentation is provided by an independent qualified third party, again, such as appraisal or a CPA or tax attorney, somebody like that. For private lending, if you're using IRA to lend money, amortization schedule at the time your investment is made will qualify that. So each time we receive payment coming in on the note, then we would update the valuation based on the amortization schedule. If we don't receive an amortization schedule, we will simply report the same value of the investment based on our records, along with any other assets held in your account, to the IRS via Form 5498 on an annual basis. So if you lend out $100,000 and you do not provide an amortization schedule, every time we receive payments coming in, we will assume that is simply interest and continue to show the note at the same $100,000 value. If you want to change that value, you would need to complete our fair market valuation form and provide supporting documentation or a third-party signature, such as the borrower, to update the value. If your asset doesn't have value anymore, to mark an asset value to zero, the Internal Revenue Code requires very specific types of documentation. Following are some of the examples: a deed of trust, a trustee's deed for a deed of trust investment, bankruptcy or receivership paperwork showing the bankruptcy or receivership has been completed and that the disposition of all assets has been completed. Evidence of an entity being in bankruptcy or receivership is not by itself enough to remove the value. We have to have some documentation that shows that the bankruptcy has been completed. A cease and desist order from an entity such as the SEC or similar state agency would also be proper supporting documentation. And as always, if you have a qualified third party or you have the investment sponsor, can sign off on the fair market valuation stating that there is no value of the investment. So what is Entrust's role in the fair market valuation process? We are required to provide a fair market valuation to the IRS every year. All retirement account custodians report fair market value of all their accounts to the IRS every year as of December 31st. We send to you the Form 5498, which has the same fair market valuation for your account that is being provided to the IRS. We are always going to report a fair market valuation. It is up to you to update us with the valuation if it needs to be updated. So how do you submit your Entrust Fair Market Valuation form? You can log into your online portal and complete the fair market valuation through there. You can fill out an online form and email it to fmv@theentrustgroup.com. You can print and fax it to that phone number, 510-587-0960. Or you can mail the form to the Entrust Group, Attention Fair Market Valuation, at our address in Oakland, California. And this is what our fair market valuation form looks like. So the top part has your account owner information. So your name, your account number, your account type, email address, phone number, address, city, state, and zip code. The second part is the asset on which you're completing the fair market valuation update. So the name or description of the asset. So if it's a note, you would put the borrower. If it's a private placement, the name of the investment. If it's real estate, the address of the real estate. What type of asset, real estate, private equity, or lending. What percentage of ownership your IRA holds in that investment. What the current valuation is based on the percentage ownership, and then the total asset value, and then any notes you want to put in. The third part is if you have a third-party valuator information, so their information along with their signature. And then section 4 would be you as the account holder would then sign that section of the form. So before we get to the frequently asked questions, I'm going to pass this off to Nikita, who's going to walk you through the process of submitting the fair market valuation through the online portal.
My name is Nikita Brodsky, and I am Chief Strategy Officer here at Entrust. Today, we're going to walk you through how you submit your FMV at the Entrust online portal. We'll be going through three basic scenarios depending on the record-keeping system or method used at Entrust. First method, we call it 1 unit per holding, which applies normally to a single member LLC or to ownerships where it is really hard to separate the value submitted by different participants. 1 unit per holding actually means that you submit the entire holding as one single unit with price per unit equal total market value of the holding. The second method is actual number of shares that you own multiplied by actual price per unit or per share. Those methods apply to different types of private equity, and where investment provider specifies actual number of shares or units that you own. Sometimes it's more useful to match reporting and records at the Entrust Group with the reporting of the sponsor. And finally, the last method we also use is a dollar per unit accounting, which applies mostly to different types of loans. And private loans can be issued in the US dollars. Loans can be issued in different currencies. That's why it is important to keep this dollar per unit accounting. I'll show you quickly how different methods work and how the process is designed to help you identify and quickly follow the different scenarios. As a separate case, we'll also look at declaring your asset worthless, which is a rare case, obviously, but it's also present at the Entrust online portal as one of the options. We are now logged into the main screen of Entrust online portal, which is dashboard. The dashboard displays account with different quick links associated with account, including statements, tax forms, etc. On the asset tab of the online portal, you'll be able to see different assets or holdings at this specific account. And we have here limited liability corporation, 2 types of corporations. Actually, one is recorded as 1 unit per holding, and you can see that market price of that 1 unit equals the total market value of LLC. The other LLC, we have 7,500 units with $2 per unit market price, with the total market value of the holding 15,000. Real estate is a property that can be owned as one whole property. It can be owned as a share of the property. In this case, we're talking about one single entity, one single property, one single holding with market price $75,000 and total market value $75,000. That method is the same as in case with the first LLC we've just seen. Unsecured notes. This is the example where our record keeping supports so-called dollar per unit accounting, where we have a note issued for $5,000 and it's $1 per unit with the total value of the note $5,000. We'll look one by one at different options and how FMV is submitted. FMV option is available either through an activity tab or I want to tab. Let's go through activity where all the transactions are listed, pending and completed transactions are listed. Fair market value is the option listed closer to the bottom of that list. We click on that option. We don't have any completed on or pending FMVs at the moment, so I'm going to click New FMV button and choose one of the assets from the list. In this case, let's start with the asset that is recorded as 7,500 units with $2 per unit. So we actually have number of units, and this is currently supported both by the investment provider, issuer of the stock, and Entrust. So we click on that holding from the drop-down list and specify that I want to update the fair market value of that holding. And as you can see, the other option is to declare the asset worthless, but we can go through that option separately. So I'm clicking update the fair market value, click next. And on the next screen, because the accounting method is pretty strictly defined as certain amount of shares with price per share, The only thing that you can update here is you can specify new price per share on that screen. And if I put $3 per share, it'll automatically recalculate the new market value, which will help me just click next. In this case, I don't even need to think or know what is the underlying methodology, because the only option on the screen is to update the new price per share, which will recalculate automatically new market value. And that's it. Questions that we receive from the clients submitting fair market value forms. What if number of shares changed? What if a sponsor deposited an interest or a dividend for that holding, and that dividend was paid in the form of additional shares? In other words, now you would own not 7,500, but let's say $8,000 shares. And the answer is pretty straightforward. It's not an FMV. Adding additional shares to the holding is, in our world, it's called a transaction, a buy transaction, which needs to be entered as a purchase of additional shares. Even if it was given as a dividend, it still needs to be reflected as additional funding to the holding, additional investment. And we can go through that process separately. But at this point, let's just assume that number of shares stays unchanged. We're dealing with the same holding, with the same amount of ownership. We're just updating the current market price. So I click next, and on that screen, all I need to do is just upload a document. So we click on the empty field called Upload Supporting Document and choose one of the documents. So the field is required. So at least one document needs to be submitted here. I can specify that I'm using a third-party evaluator to help me identify the fair market value of my holding. In this case, additional information is collected, but this option is not required. You may skip this option. You may provide additional information on the third-party evaluator if you like. When you click next, complete the disclosure, review, submission once again, and click submit. The submitted document will be listed here as a completed activity. And let's go to activities again. Click fair market value. You will see this submitted fair market value on the screen. The asset will be then updated shortly. It's fully automated process, so no additional steps are required. No verification is collected. So the asset will be updated pretty shortly after submission has been completed. Now let's go and walk through a different scenario where we are updating a value of another asset, which is recorded at the Entrust books as one single unit per holding. And in this case, we will choose a real estate holding. And again, I want to update fair market value. So click next. In this case, the interface looks slightly different. It is still showing that I own $75,000 worth of holding, which is the real estate property, and my percentage of ownership is 100%. It could be less. In this case, current asset price will be reevaluated accordingly. But in this case, I'm owning the full entire property, and I want to appraise full asset price versus own share of this holding. And those options are provided in case you don't own the property, like the entire property by yourself. You share that ownership with someone else, which could be another IRA, by the way. In this case, I own 100%, and therefore full asset price versus owned share, it is the same thing. But as you can see, the only available option for me would be one single box, which is new market value, updated total value of your asset based on your percentage of ownership. And again, it's 100%, so I just provide total market value, and let's say it's $90,000. And that's it. And I click next. Again, on the next screen, I am required to submit additional document supporting this valuation, and instructions on what kind of documents can be submitted as a proof of valuation are provided at the FMV instruction page. Complete the disclosure, and the new FMV form is also listed as completed. And let's go again to the activity history, fair market value. And we now see two different submissions listed as completed. Both values will be updated shortly on the statement. So let's click refresh button. As you can see, the Real estate has already been updated. It's a quick and straightforward process. The private placement PPM, private equity holding, is still being processed. It takes a little bit longer time, but it'll be updated here shortly as well. And finally, let's go and walk through the process of updating market value of the holding, which is recorded as a $1 per unit method. And as mentioned, it could be an unsecured note. And the reason for that is because the note might be issued in different currencies. In this case, the price per unit is dollar, so total market value is calculated as dollar multiplied by number of units. Again, update the fair market value. In this case, it's not even listing number of shares or units owned. It is a default option. I own $5,000 per holding. Total value of the private loan note that was issued is $5,000. I update the market value to $4,000. Click next. And the most often reason for updating market value of notes is because in some cases, when the note is being paid off, the principal value of the note is not reflecting the schedule of repayments properly. So we may record all the payments as income. It doesn't affect taxes at all. So everything is collected as cash and deposited to your IRA. But when the value of the note itself at the end of the year is not recorded correctly because kind of the differences, approaches to reflect the regular repayments, this is the situation when the value of the note can be updated. So we are decreasing actually the value of the note, which means that it has been paid partially already. So I click next. Again, upload a document which will be used as a confirmation of this valuation, which could be just kind of a self-attested document and maybe executed by both yourself and the borrower. It's quite flexible. I'm not using third-party evaluator. I'm just self-declaring the updated value. Click the disclaimers, click submit button. And again, the new fair market valuation has been submitted and completed. Now, if I go back to fair market valuation in the activities tab, I will see all three submissions corresponding to three holdings that I have on my account. And if I click to the asset tab, unsecured notes will be updated shortly. Private equity investment limited liability corporation will be updated shortly. Real estate has already been updated to 90,000. Now, there is a fourth option in the FMV section, which is called declare your asset as worthless. In order to use this option, we go and again, click new FMV, choose one of the holdings that we have. And here we choose declare the asset worthless. I have read and agreed to the disclosure below. Click next. Again, upload a document which will serve a proof of declaration, not using third-party evaluator. It's just based on the document that I'm attaching. Click next. And at this point, all four options have been walked through. Please, if you have any questions based on this quick overview, the process is fully automated. And at this point, I'm passing it back over to Bill for answers to some top FAQ that we receive on that topic.
Okay, thanks, Nikita. So let's go through some frequently asked questions that we get associated with fair market valuation. Why does the IRS need to know the value of my account assets on an annual basis? The answer is if a taxable event such as a non-cash distribution or Roth conversion takes place during a given tax year, the assets must be valued so that the recipient pays income tax on the correct amount. So that's one reason. I also believe that one of the reasons why the IRS needs to know the fair market valuation of every retirement account that anybody holds is that I think it's used for certain government reporting in terms of our GDP. How long is your fair market valuation valid for? So your fair market valuation is valid for 90 days after submission. So what that means is that if you were, say, going to convert your asset from a pre-tax account to a post-tax account, or if you're going to take a distribution, then once you submit the fair market valuation with the appraisal, then you have 90 days to do that conversion or take that distribution and have that valuation be the valid one for that transaction. If you try to take a distribution after that 90 days, we would need a new fair market valuation update. Now, where this can be handy is if you're taking a distribution, let's say a percentage of the asset over 2 different years, then you can have that fair market valuation, have the appraisal completed, let's say in December of 1 year, and you can take a partial distribution in December, and then you can take another partial distribution in January and have a distribution account for 2 different years and still use the same appraisal, the same fair market valuation for those 2 distributions. Can you provide your own valuation of your account assets? The answer to that is no. If you have supporting documentation, as mentioned in previously, that supports whatever valuation, then that's valid, or you have to have a qualified independent third party that is not a disqualified person provide the valuation and sign off on the fair market valuation form. Who is considered a disqualified person to your account? You as the account holder, your spouse, your ancestors, so parents, grandparents, etc., your lineal descendants, so children, grandchildren, etc., spouses of lineal descendants, and then also beneficiaries of your account, and then fiduciaries to your account are all considered disqualified persons. How should the assets in my account be valued? A fair market valuation is the market value of a property or asset based on what a knowledgeable, willing, and unpressured buyer would pay to a knowledgeable, willing, and unpressured seller in the market. That's the definition of what would be considered fair market value. What happens if you do not turn in your fair market valuation form? We are required to report to the IRS on an annual basis a fair market valuation. So if you do not turn in a fair market valuation form, we will simply report the same fair market value that you showed as of the end of the previous years. Note that the IRS does require annual valuations. They require the custodian to report valuations on an annual basis. Is this only a requirement for self-directed retirement accounts? The answer to that is no. All retirement account custodians are reporting a fair market valuation to the IRS on an annual basis. The difference between a self-directed retirement account versus a typical account with a bank or brokerage firm is that usually with those banks and brokerage firms, you're holding investments that are traded over an exchange, which means that they can easily be updated. The valuations are updated on a daily basis based on the exchange price, whereas with self-directed retirement accounts holding non-traditional assets, they're not easily valuated and require the account holder to update the custodian with the valuation. Who pays for any valuation, such as an appraisal? Your retirement account is required to pay for that. If your account doesn't have sufficient cash to cover the cost, you will have to either make an annual contribution, transfer, roll over more funds from your other custodian to pay for those valuation services. You're not allowed to just simply pay for those fees out of pocket. Your asset is worthless. Do you need to update Entrust so that you're not billed for the asset? Yes. We would not know if your asset is worthless unless you provide a fair market valuation form along with either the supporting documentation or a third-party signature letting us know that the valuation needs to be changed. If you need more information about fair market valuation, you can visit our website and learning center. If you want to see if you have the most updated fair market valuation form, just go to our website under forms and you can see the most current version. If you want to contact Entrust, just reach out to us by calling, email, or completing our online contact us form, or you can follow us on social media. Thank you. Let us know if you have any other questions.